I'm now going to hand over to Mark, who's going to be chairing the buyers panel. So over to you, Mark.
Thank you, thank you, thank you. So, big welcome to the stage. Jim from the BBC, Graeme from John Lewis, and Darren from Ulster Bank. This feels like a bit formal, like a sort of local government committee panel, but anyway. Right, so we'll kick off. Perhaps if you could do a wider introduction to each individual and your companies, and that would be helpful, starting Jim.
Just going to pour my water then. So, good morning, everyone. I'm Jim Hemmington. I'm Director of Procurement at the BBC. I look after all the external spend that we spend on supplying goods and services. My team also buy some of the BBC's programmes, and we cover a spend of about £1.5 billion per year. It's about 20% of the licence fee. We have a number of strategic outsourced services, like the collection of the licence fee itself, which has had quite a bit of publicity recently. Transmission services, finance services, some of our HR services, facilities management, the kind of stuff that you'd expect to see outsourced. But some of our more core services, like transmission and like play out of our channels, is all outsourced in a strategic portfolio. We also spend a lot on things like travel and transport, getting people around the world. We spend a lot on marketing, and a huge spend on things that are associated with producing programs, like studios, props, graphics, digital technology, all that kind of stuff. And one thing I would say is, so that spend is covered by a team of about 80 people. And one thing I would say is that, particularly in the last few years, the breadth of our involvement in what the BBC does has extended significantly, and our resource now is not only under strain, but we're needing to find new people with different skills to do a much broader breadth of stuff. And that needs to happen quickly, because the other thing for us, although we're big players in the media market, the competition for us is absolutely huge. 2 years ago, no one would have suspected a technology company like Netflix to come along and almost wipe out some of the BBC's core services. I know that sounds a bit dramatic, but it could have got that way if we weren't able to respond to some of those challenges around the way programmes are being made these days. So I don't know if that's enough for now.
Thank you for that brief intro.
Yeah. 2 minutes, you said.
It said on the brief 2 minutes. Graeme?
Okay, Graeme Matheson. I am responsible for the John Lewis Customer Contact Outsourced estate. We spend about £30 million a year, running currently 3 sites in the UK and 1 site in Manila. For John Lewis, I suppose, where we're at, we are largely poor shopkeepers. We sell everything from pants to pizzas to television sets in an increasingly challenging commercial market. Whilst the amount of product we push out the door these days is consistently high, the margin that we're making in that is increasingly low, because our competitors are in almost permanent sale. Some would say Debenhams and House of Fraser are almost in fire sale. So we have to deliver to our customer expectation that we have built over the last 100 years, which is exceptionally high, but we have to deliver that in a time where our profits are at an all-time low. Bonus for us as a partnership last year was the lowest I think it has been in about 40 years. We've recently announced that we're closing our first store in a similar time frame. We're closing Knight and Lee in the southwest of England. We have too much retail space across our estate, and yet our customers' demands are just as high, in fact, if not higher. The challenge for us in the outsourced estate, I think, is how do we engage with our contact centre advisor population to deliver what we called partner magic in an increasingly challenging environment, and deliver that to customers who have a demand of us that's exceptional, in that our customers, some of them still like to send us envelopes stuffed with cash, and we're expected to reply to those people in almost a handwritten letter. And then we have the millennials who don't want to talk to anybody. All they want to do is to go through a nice, simple, smooth transaction. But we want to engage with those customers. We want to have an interaction in order to have an opportunity to deliver that John Lewis-ness to that transaction, and not just make it a simple transaction they can get through AO. So for us, increasingly tough financial times, but times where customer experience is absolutely key.
And lastly, Darren.
Yep, thank you. Good morning, everyone. My name's Darren McKnight. I head up the outsource service function for Ulster Bank Ireland, so that's the Republic of Ireland entity. We procure services from within our wider banking group, the RBS group, as well as external services. That comes to a total of around 200 million per annum, and services right across all all the various functions. So we have internal services like finance, HR, all of our technology, or certainly high 90% of our technology estate is outsourced. And then we've got customer contact and customer processing, largely outsourced as well. Some of the challenges we're facing into as a bank, really, it's kind of two broad themes. Is first of all, staying in step with new challengers to the market. So you'll all no doubt be familiar with some of the names like Revolut, Monzo, N26, Starling, all these new startup banks who kind of can develop without the baggage of what traditional banks have, is this archaic core banking systems that's hard to innovate and develop upon. And then the second broad challenge we have is just tougher regulation, and that's just getting more increasingly difficult to be agile and to do things at pace.
Thank you. So I think you can see all three organisations are going through huge change and huge challenge. What we're going to do is look backwards a bit, come to the current, and then look to the future. So starting off with looking back, say over the last 5 years, what are the trends that you've seen in your organisation and the changes that you've experienced? Graeme.
I guess so prior to joining John Lewis, I worked at O2, and I was part of the team that signed a fairly major outsourcing deal where we shifted our in-house sites and our contact centre population and migrated those to an external supplier. That was a 10-year deal. I think at the time it was the largest outsourcing deal done in Europe, and it was a deal built entirely around transformation and contact reduction. The commercials of that deal were stacked entirely around that place. But what we didn't do was to give that supplier the ability to actually drive that transformation. So we wanted to interfere with it, and we wanted to pick with it. I think when I look at that deal at that point in time, it was considered to be market-leading and market-changing. When I look at the deals that we are now signing, we're now buying bums on seats. We recognise that actually, unless we're willing to hand over the reins and actually say to a supplier, you take it all, you drive the digital transformation, you drive the roadmap, we'll apply the brand to it, but you crack on and do it. Unless we're willing to do that, we are just spending money for the sake of it. And I don't think that we currently, in the retail space, have an appetite to get to that kind of place again.
And from an Ulster Bank perspective?
Yeah, so again, probably underpinned by the two challenges that I talked about. I've seen, if I look at my own role, it kind of just came about around 5 years ago. So traditionally, what we did was we bought services, we bought goods, and that was it. It was done in good faith. We trusted it happened. And there kind of was no oversight or management thereafter. The types of things we were buying were just kind of day to day. I'd almost say, as an organisation, we were complacent. We took things for granted. We had a customer base. Yes, we tried to grow that, but we didn't really innovate in any great anger. And that picture has started to evolve more recently over the past sort of 18, 24 months, where we've had this realization that we do need to innovate, we do need to develop, and therefore the types of services that we're buying have fundamentally changed, and we're moving into new technologies as well. So that's kind of the roadmap if I look back over the past 5 years.
Okay, and Jim, BBC?
So a few things really. One big change over the last few years in particular is we had many managed service models across some large areas of our supply base. And we started to move away from full managed service to smaller contracting arrangements. And that started to happen because of issues in the supply chain, actually. And we took the attitude that you're managing the service for us, you take the risk, and don't bring us any problems, just provide us with the service that we need. And then obviously things like modern slavery, carbon footprint, a big one for us is seeking the end of single-use plastics. And what we found was that we could only really get a line of sight to that stuff by moving away from these managed service models and pushing a much stronger supply chain management approach to it, which means now that we are managing significantly more arrangements directly than we used to. And so some of the disadvantage of that is that we're taking more of the risk associated with that. We're taking an integration role across some of our supply base as a result of that. But the other key driver for that, not just the sort of social sustainability issues, but the other key driver was the need for rapid change across our supply base. And we found that managed service models and more complex supply chain models were not particularly agile or flexible. So we have found, particularly in our program making areas and our technology areas and those relationships that support our web services, we've got a myriad of direct relationships in there so that we can control and set the strategic direction for those relationships much more effectively. So that's the biggest driver or change.
Thank you. And I think all of those parallel to some of the things we talked around earlier. In terms of coming to today and your organisation, so we talked around innovation, we talked around technology. So I'm going to first ask you to give a score out of 10 around how good you think your organisation is at innovation. And then what you're doing, that might be 10 out of 10, so you don't need to cover the second question. But what are you doing to improve that in terms of constantly bringing innovation to the business? So, any volunteers?
Yeah, so I think we have a desire to be a 10 out of 10, but I come back to the fact that we are, again, poor shopkeepers. And when we go to our leadership board every year and say we want to spend on our digital roadmap, not surprisingly, we lose out to, but we've got a Christmas advert to pay for, or we've got stores to pay for, or we've got a bonus, or a golf club, or 5 yachts that sit in Southampton that demand paying for. So whilst we have a desire and we recognise that technology is right, we do deploy a level of technology. So our desire is a 10, our actual score is probably closer to 5 or 6. But what we have proven is that by dripping in the right piece of technology, for example, we've recently launched a lipstick emulator that allows all of us around the room to see what shade of lipstick suits us. You can try it later on. But what that is doing is it's allowing us to drive online trade. So we try and drive trade using the right bit of technology. What we're not doing is going out and spending billions of pounds each year saying that, do you know what, actually we just need to scrap the whole lot and start again. So whilst we have a desire to deliver it, for us it's about delivering the right change at the pace that the John Lewis customer wants. We need to recognise that we're not an AO, we're not an Amazon, we're not trying to compete with those. We're in an entirely different space. And what we have to do is to deploy the right piece of technology that will allow us to deliver the right customer experience. And what we cannot do is effectively start switching off channels to customers Because I keep coming back to the fact that we've still got customers who want to spend cash. So we can't just switch off that capability for them. So whilst we deploy technology to capture new customers, we have to continue to keep our legacy processes in place as well.
So who can beat a lipstick emulator?
No. Certainly a bank couldn't, no. No.
An eyeshadow emulator?
Yeah.
Julie?
Yeah, so from an Ulster Bank perspective, again, much the same story as Graeme. There's a couple of barriers so we would consider ourselves to be innovative. We have a huge desire to improve upon that, but a couple of the barriers, again, the thread that will continue to run through this is, our ability to innovate, given this sort of heavy core banking system and platform we have, and the regulation, which makes it difficult for us to do it in an agile manner. But that said, so within those constraints, there's certain things that we can do almost around the margins, the customer interface side of things. So without impacting on the safety of our core banking systems, we can improve the customer experience. We've got probably what is a market-leading mobile app in the Republic of Ireland. We invest a lot of time and effort working with the startup ecosystem in the Republic of Ireland. So we're a partner to a startup hub called Dogpatch Labs, and that's just in the centre of Dublin. That's been now in place for about 3 years. We run our own internal growth hub as well, and that kind of looks at almost intrapreneurship, so where we encourage staff to come forward with their innovative ideas, and we work with them in that kind of growth hub type environment to help sort of develop them. And one sort of new exciting initiative that's been progressed at the moment is in relation to the agri sector in the Republic of Ireland. So quite a healthy sector for us to be in, and conscious of the people that we're doing business with are basically the farming community and fraternity that they typically wouldn't be well in or heavy into the administrative end of things. So we've developed almost an app that will help them engage with us and take some of the bureaucracy and paperwork out of the process for them. So that's just an example, but it's just a challenge. We would rate ourselves highly, but the reality is we're not that good.
You ducked out of the question of giving an absolute score, but that's Jim.
Yeah, so the BBC would see itself as still being very pioneering in technology. Maybe not the first to market on everything, but still very, very innovative. We became fully sort of digitally aware, if you like, in 2012 when we turned off the last analogue system. So everything about the BBC and the way it operates, the way it produces its products is all digital and connected. We still try and do innovative things. One thing you probably won't see is that we had a lot of animated children toys that our research guys developed, so you could put it in your lounge and it would act out what was coming on the TV screen. So we had a bunch of Daleks invading your lounge and speaking the words through the TV. But it was felt that those products were particularly frightening to children, so we decided not to pursue it as a product. One thing we are looking at is we are doing, in partnership with Microsoft, our own version of Alexa, but it will be better than that, apparently. It will be an interactive, and I think it's going to be called Marvin. It's going to be a boy. And I think the idea is that it doesn't just work on instruction, Alexa, play me this, or Alexa, what's the weather like? It will actually ask you questions about your preferences to discover the best BBC content for you, and we may extend it into other things. And we reckon that will start to be delivered the early part of next year. So for us, it's still thinking about, trying to keep up with marketing develops and go one better where we can.
What was the score, Jim?
Sorry?
What was the score?
What was the score?
Yeah. Out of 10.
Oh, out of 10? Oh, 10, obviously.
Right. Of course.
10.
Of course. I thought it'd be 11,
Yeah.
Jim. I thought it'd be 11.
10 and a half. Yeah.
So, still coming on to today, what I want you to just answer is, or share with us, and we're talking about client-supplier relationships. And I'd like to get your view of the one thing that you would stand out and say makes a good client-supplier relationship, and then also, from your experience where it's gone badly wrong, what was the one thing that made it go badly wrong? And you can name suppliers as well if you wish, apart from, of course, entity data. Yeah?
Yeah, but Joe, I'll go briefly on this. I'll not name suppliers, but we can talk from a relatively well. It's a contemporary example now, but it started off a few years ago. And the thing I think that makes the supplier relationship work is trust. Certainly in the context of the example I would use, we entered into a particularly complex deal or arrangement with a supplier, shrouded in sort of heavy regulation. And what we as an organisation did was try to impose our way of working on the supplier. Sort of set the rules they would work to, almost be very prescriptive on how they would achieve the outcome that we desired. And that just didn't work. It just didn't work. It didn't fit their operating model, their way of working. And we persisted and we tried to bend and break and squeeze it into shape, and it just didn't happen, and it caused us no end of issue on an ongoing basis. And we've since now taken the learnings from that and given the supplier some trust, and asked them to being very clear on what the outcome is. And we talked this morning, or Mark spoke about outcome-based contracts, and we've kind of moved towards that and been very clear on what the outcome is that we're expecting, and the common goal for both parties. And we've let the supplier off to their own devices to design and build their way of doing it. And it's early days yet, but it's certainly been a marked improvement. We don't continue to see the issues that we did, certainly not on the scale that we have done recently, but improvements are very good. So look, from my perspective, I just think trust. Trust is key, and you select a service provider or a vendor you want to work with. To me, that's because they will bring something to the deal, to the table, and you've got to trust them to do that. That they're a specialist in their own sort of domain.
Any other points? I mean, trust is up there in front and centre. Any other points?
Yeah, I think one of the things that we find that is often the frustration is inflexibility, really, on both sides, because you get it mixed up with being agile and innovative, but actually you both have operating models that sometimes just aren't compatible, and that creates, and when there's inflexibility on both sides, it diminishes the relationship. And sometimes you've got to recognise that that's what you're being confronted with, and then you need to engage the stakeholders both internally and with your service providers to see if you can crack that one. Because sometimes inflexibility is coming because to do something different, there's a cost, and an investment, and sometimes a different skill base that may be required. So that is one that we find more and more. Inflexibility it leads to many things, I think.
Mm-hmm. Okay, I'm going to come on to the next question because we're running short of time. So looking forward to 2025, and we cited that the CPO function or the buying function would change to much more of a partnerships officer or a value-based function. Perhaps starting with Graeme, what would you like to be called in 2025? Or what would you like to be doing in 2025 if you're still working in terms of the role?
Ideally, I'll be retired by then, but let's see what comes. I guess that what I see for us by 2025 is we will be moving to a place where we're operating more in partnerships with suppliers. I would like to think that we're in a place where we are signing transformational deals with suppliers, but giving them the capability to deliver that transformation. So, not just genuinely sitting down and having the conversation initially, but driving a conversation and a relationship with them that allows us to have the trust in them to say, right, come into our business and drive that change rather than keeping them at arm's length and then beating them with a stick when they say that they can't deliver transformation. So I think that, partnerships is absolutely key. Partnerships is definitely the future for where we need to get to. And it's about signing the right deals to deliver that.
Jim?
So 2025, a nice pair of John Lewis slippers, I think, and a pipe.
Or a lipstick emulator, yeah?
Sure, we can sort it.
I think more and more we're going to see the procurement function become more of a partnering function, and the word procurement will start to disappear, actually. It will be a business partner to manage and obtain the sort of relationships, external relationships that organisations are going to need to function. And that could be straightforward buying, it could be partnerships, and I think in particular with greater connectivity, we're going to see suppliers much more embedded into our business models as well. So there's going to be an extension of your organisation into your supply base enabled by connectivity and the sort of technology that you can use through cloud and all these sort of sharing things. So the traditional boundaries, I think, of I'm a buyer, your supplier, will change considerably, I'm sure.
Yeah, and just one final very brief point. I agree to what the gents have just said. I think the other key thing for me is within the organisation as well. So there needs to be a cultural shift where maybe today, procurement function is seen as that area that will do the tough negotiation and really screw the supplier to the table, squeeze every last penny out. And that's what needs to change. It needs to be seen more in the context of partnerships. The procurement function, or whatever it will be known as in the future, being seen as that area that will coordinate and facilitate and find good matches to make those partnerships.
Yeah. Thank you. There are a few questions on Slido, so I'm just going to pick one, which I'm going to focus on Graeme, I think. Panel, for how long do you see the smartphone staying at the centre of the digital customer experience? Will the Home Hub take over?
Do you want me to come back on that? I think, we have a web presence, we have an online presence, but I think it's probably fair to say we are well behind the curve on a lot of that stuff. Do we see the future of being our customers buying lipsticks and sofas by talking to Alexa? Absolutely. Will we find it easy to get to a place where we can do that? No, of course not. But we have to make sure that the smartphone continues to be the hub. I think, when we're all sitting here with one, we can't get away from the damn things. And it's absolutely going to be at the heart of all of our digital customer experiences.
Brilliant, thank you.
I think your smart TV will start to challenge that as it gets much more into a digital offering. Only that it just gives you a bigger screen.
Yeah. No, look, I mean, the only point I would offer on that is more from a user's perspective rather than from any sort of area of expertise. But not all your shopping's done in the home, I suppose, is the first point. Yep. And there could be people sitting here now doing some shopping for all we know. But I think that point in principle means, to me as a user, the smartphone will live on. Yeah.
So I think you'll all agree that our panellists have been quite open and honest in terms of their views. I'd like to thank Jim, Darren and Graeme for their insights and contributing. So thank you. A round of applause, please. So we have a short break now, coming back at, we'll shout, but 15 minutes. 15 minutes. Thank you all.